Ladies and gentlemen, stop the presses. There has been a law signed on May 26th that will dramatically affect the livelihood of many condo unit owners and how these things are managed. And I haven't heard anything about it, so I'm bringing it to you here today. Kimber White, my banker extraordinaire, who has inside knowledge on all these things, is going to bring us a little bit of revelation and some insight on what is happening with condos in the state of Florida and how they will be affected with potential assessments on financing, et cetera, et cetera, et cetera. There has been reverberations ever since the unfortunate crash of that condo in Surfside, and these are the after effects of what needs to happen, but it's going to be a shock to the system. Kimber, tell us, please, what do we need to look out for?
Well, thank you, Milton. What's happened? Like you said, 7 days ago, the 26th, the governor signed into law the new condo legislation that will take effect January 1 of 2025, but it's going to gradually over the next 2 years be affecting condo associations because they have to be prepared. Once the Surfside collapse happened, they immediately put it in that had to have a 40-year reserve study through Fannie Mae and Freddie Mac, which is the entities that buy your mortgages. If you're going to do a mortgage, they require 40 years. But the governor and the legislature in Florida decided 30 years. So now it's going to be 30 years. So now it would be, if this was in place, it would be any condo building prior to 1992 would be required a 30-year study. And that would be an engineering report. And if there's anything wrong, then they require a second study under this new law. They're going to require a second engineering report to find out what's going on. And then you have to have reserves to take care of it. So this is something that's going to affect associations, but not only in part of that law. The greatest part to me, and I know people are complaining, well, people aren't going to be able to afford condos and move into them, is in the lending side, is a lot of condo associations. This is one of the reasons Surfside and other entities have they call deferred maintenance, because they didn't collect condo dues. And what does that happen? It means that people can't buy in there, or can't get 5%, 10% down, 20% down. But not only that, that means there's not money if they need it for the future. So now the new rule says you can't defer reserves. You can't put off deferred maintenance. That's part of it. So you'll have to have a fully reserved condo association.
Question, fully reserved condo association means what?
10% of your annual budget must be in a reserve account.
Okay, so if your budget is $3 million, you need $300,000 in a separate reserve account, rainy day fund for what can happen to the property when it needs to be taken care of. They have to do the roof, they've got to do the lobby, the cooling towers, etc. They had to have the money in the bank, correct? It's not going to be special assessment surprise anymore.
Correct. And if the, and also, then the real part is, if that engineering report says these repairs have to be made, you're going to have to special assess. It isn't going to be like down the road.
Waiting.
You know, waiting. You're going to have to assess to get those money into your associations. Is it going to be bad for some? Yes, it is. But overall, for the condo industry in the state of Florida, it's going to help us. It's going to help the consumer. I mean, the tragedy that happened in Surfside, you know, we cannot have another one of those. And it was because of maintenance and not taking care of properties. This is probably, I know of, the strongest law in the United States for condos that's gone into place.
And I think it's really necessary because, you know, God rest their souls, but I was in that Surfside property about 6 months prior to the collapse. Wow. And my jaw dropped when I went there and I saw the state of disrepair that it was in. My client that I was with at the time, we turned around and we just said, I don't know how this is even allowed.
Right.
And there's only been a few buildings that I've been in where I've been like, Jesus, this really, like, somebody needs to take care of this place, but there really shouldn't be any. Because it's not just dependent upon one person, it's dependent upon the many people that live there. And, you know, you really shouldn't have the quality and the condition of the property up to vote. when you have to replace your roof, you have to replace your roof, right? When you have to meet building codes, you have to meet building codes. You can't have it a if and a maybe when we get to it, because like if you ever seen an older home that has had deferred maintenance go on for years and years and years, you have to bulldoze that home after a while. It becomes unsalvageable. But when you're talking about a condominium with hundreds of units, that's not something that should be able to take place. That affects too many people.
It does. And you know, an example, we had, and I'll never forget it, a condo association here that was not financeable because, and you probably remember, the balconies were off of it. It had no balconies, and the parking garage was cracked and torn apart. Deferred maintenance. There was huge assessments. And what people are saying right now, oh, but the homeowners aren't going to afford to live there. Do you really want them to live in something that's not safe and structurally sound?
Right.
And in the end, sooner or later, it's like pay me now, pay me later, you know, and you're going to have to understand that. So buyers are going to have to be careful with that.
Pay me now or pay me double later.
Yeah, pay me double later.
You said do it right, do it once.
Right.
You know, I'm going to share my screen because I have here the points from this law that I think are important for people to know. So give me 1 second here. Boom. So I've shared the screen here. This is the 10-year reserve study, and it's going to go under the proposal. The Condominium Association require conduct reserve studies every decade to make sure that the buildings have the resources to finance the needed structural improvements. Right, the bill will require the condos would have to be recertified after 30 years if they are 3 stories or higher, or are 25 years old, and within 3 miles of the coast. And I think that's important because if they're within 3 miles of the coast, then the likelihood that the rebar, which is reinforcing the concrete, could be exposed to the elements, to the salt water, and therefore be compromised is much higher. And that's why I think they need to do those concrete restorations. So I'm going to leave it up here so that folks can read this information and understand it. And it is just something that needed to be done. And I remember we were talking about the blacklist of condominiums. There were, I think you were mentioning something about 750 condominiums throughout the United States.
Yep.
Something to that effect.
It's over 900 condominiums in the United States. Okay. And that are on this, what we call the do not lend list, the naughty list for deferred maintenance and other things. And out of those 900 and some, the majority of them are in Florida.
About 40%, right?
60.
Wow. Okay. 60%.
Yes.
So this is something that needed to happen.
Yep.
And I think that it will be better for everyone in the long run. But in the immediate term, what I personally see happening is rents are going to go up to cover the special assessments and the extended carrying costs of these buildings. Values will have to go down, and potentially a lot of these older buildings will be sold to investors and developers that are then going to tear it down and rebuild something better, something bigger, something newer, because I just don't see how some of these communities are going to be able to refill their reserves. I personally know a building in North Miami that was majority owner, investor owned. And those investors, because I know one particular investor who owns 25% of the building, they never voted for the assessments. They always put off the improvements. And this is a building that I thought to myself is going to need to be purchased by an investor and redeveloped because it's falling apart.
Yep.
And so if you're going to have so much control in the hands of so few, and that they then allow the building to go into disrepair, it's just not going to lead anywhere good.
And if you look at this, you know, Milton, I think what really is probably the best part is one of the best parts is, and it says after phase 2 inspection reports received by the county, the repairs must begin within 1 year. And if the association fails to bring or schedule the repairs within a timely period by the county commissioners and local officials, they can condemn the building as unsafe for human occupancy. And I think that's very important because we've had these structural engineering reports done, and because of backlogs and stuff like that, that people didn't do it. That was partially because of Surfside. That was one of their issues. And the other one in paragraph 1, it says, and there also will be barred from waiving a requirement that I just said, that they put money in reserves to make structural improvements. Although they could continue to waive collect and reserve funds for other improvements, but they must put the reserve money in for structural improvements.
So I have two questions. First question: if I own a unit in one of these buildings that is then condemned and I have a mortgage, am I going to be foreclosed on?
If you don't pay your mortgage, unfortunately, you still have to pay the mortgage.
So you still have to pay the mortgage on a property you can't necessarily live in.
Yep.
Okay.
And they're going to foreclose on you too if you can't get insurance in that building, because when your insurance renewal comes up, that you have to have interior insurance and HO6 and interior policy,
Right.
You're not going to get insurance, and they're going to then call your note due or force price insurance.
That's one of those escalation clauses, right?
Yep.
You can't get insurance, then you're no longer in alignment with the terms of your mortgage, and then they can foreclose. Okay. And second question. What was my second question? Second question is, I will get back to you on that second question.
All right. I know that it's going to have some problems for some people and homeowners, and it probably.
Remember my second question. We're going to edit that part out.
Okay.
And my second question, I know that a lot of buildings, smaller buildings, 3-story buildings, maybe they've got 25 units in them. The majority of them have waived their reserved funds because they figure, well, if we need to paint the building or do the roof or something, it's maybe $100,000, not millions of dollars, and then they can just do an assessment. Are those buildings that have waived their reserved funds, there's no special exceptions to this rule, is there?
Yeah, yes, buildings 3 stories or higher.
So no exceptions.
No, it says if the buildings are higher than 3 stories, if it's lower than 3 stories, that is your exception.
So if they are under 3 stories, they are accepted. There is an acceptance to this rule.
Yep.
But if they are over 3 stories or more,
right,
they're in it. So then I foresee a lot of smaller 3-story buildings going into special assessments and then potentially having to be sold or redeveloped, because they may not be able to come up with the funds if they're, like, for example, in a less expensive part of town, that the unit owners may not have the wherewithal to come up with it, or they've been poorly managed over the years and already are paying a high maintenance fee, and then they'll be hit with another assessment. So this could cause some issues for sure. And I'm glad. Thank you for bringing it to the forefront. Anything else that we should be on the lookout for? Are banks making new rules for all this today?
Right now, we're not, but I'm sure that they're going to adjust in Florida, because if Fannie and Freddie says 40 years and Florida says 30, they're going to go with the 30-year rule. So I'm sure there's going to be adjustment with the entities that lend the money once these rules go into effect. I can tell you right now, the rules that's in effect on these, and you and I have dealt with them on mortgages, with these 40-year studies, we're really getting a lot of problems already. You and I see it all the time with these older buildings. Yeah. They're not filling something out. The reserves aren't there. So when you're going into something to purchase, that is something you need to look at, and make sure you have a realtor like you that knows this business. I'll say that, because I'll give an example today that a client almost lost his deposit, went to closing because and it's a little simpler, but they had a mandatory membership in a vacation club, and that's not
Doesn't
accessible.
that make it a condo hotel?
It's not a condo hotel. It was a full condo association, but part of their membership, they got to use a Marriott Vacation Club down the street. But that's still a mandatory voluntary membership. And, that's their lender said this is fine, not a problem. Well, that's not true. It's a non-QM loan. It's not a qualified mortgage. So there are things to look out for. And that's why it's important to have a realtor, and I'll say it, a mortgage professional that knows what they're doing and that is in the industry, because we're here to protect their buyer's interest.
Yeah, and
That's
I
how
always
we do
say, when I'm showing condos to a client, regardless of the budget, I try to have a background on the building. I ask, have there been any special assessments? What are the reserved funds? How much money is in the budget? How many investors as opposed to owners are living in the building? Because that can dramatically affect your down payment and whether or not you can get a mortgage, or like you said, have to go to a non-QM product. So you got to ask those questions. You got to know ahead of time. You know,
Yep.
it always breaks my heart when I have a listing on a condominium that does not have reserves. And I say, do not have reserves, do not have the funds, et cetera, and so forth. And then they send me an FHA offer. And I'm like, not only did you waste your time, you wasted your client's time, you got their hopes up.
Yeah.
You know, stop wasting people's time. You got to know ahead of time whether or not you can square that circle. Right?
Correct.
Do I have what it takes to make this happen for this particular client? And if it's a situation where it's an association that has one of these deficiencies, is that something that the client is okay with? Right?
Yes.
Because people can still pay cash for these units.
Yep.
And what I foresee is investors buying these units
Yep.
at a discount, getting the controlling interest, and then forcing a sale to a developer.
I agree. I think that's a lot. I think that's going to happen a lot.
So there's going to be some big changes. All right. Thank
Yeah.
you so much for bringing this to our attention and for always, keeping us informed. And I'm surprised I haven't heard about this on the news. It's June 2nd. This is signed on May 26th. I didn't even know it was signed yet. I only heard about it from you. So,
Right.
I'm sure we're going to be hearing about it very soon. Probably on a Friday.
Yes.
All right, Kimber. Thanks so much
Milton.
for everything.
Thank you.
Take care.
Bye.